Good morning, ladies and gentlemen. Today our group will be doing a presentation of market view of AUD against USD. Our group members include myself, Kai, Wenxuan, and Zhao. And the purpose of this presentation is to provide a forecast of how the exchange rate of AUD against USD will respond for the next 3 to 6 months by analyzing the exchange rate determinations for both currencies. First of all, I will start my presentation by introducing the major updates on net export for both Australia and US. If we are looking at next export for Australia, we can see there will be a temporary disruptions at coal exports, and the rural exports, the production for rural exports will reduce because of unfavorable weather. But however, liquefied natural gas will stay in a steady state, and iron ore is expected to grow slightly in next 2 quarters. However, on the other side, the imports, according to Guardian, Australia they will be exempted from the steel tariff by US, but however, ABC News said that even though Australia is exempted, but the trade war between US and China will impact Australian economy and drop Australian dollar by 6%, which eventually will rise our price of import goods and reduce import amounts. And in overall, if we look at the net exports for Australia, we can see there will be a trade deficit in Q3 -1, which will be a capital outflow, which means the imports of Australia will be greater than the exports, and there will be more supply of AUD than demand, and which cause a depreciation of AUD. On the other side, looking at the exports for US, recently China set a trade tariff against US, mostly on the porks, recycled aluminum, fruits and nuts. This will impact the $3 billion of US exports, and this will shift the demand curve of US dollars to the left. And on the other side, if we look at the imports, recently US is expected to set a trade tariff against China, and it will be a 25% trade tariff on 1,300 import goods, and it is expected to impact 50 billion worth of goods of China's exports, and this will reduce US import volumes and shift the supply curve to the left and eventually cause USD appreciates. And this is the exchange rate expectation for NAB. You can see in Q3 and Q4, the banks are expecting AUD to depreciate. And I'll pass the next part to Zhao.
So next is the inflation rate. We can see the graph according to the RBA. The inflation rate for Australia is growing. High inflation rate causes more imports because our products are more expensive than other countries. Therefore, people will import more from other countries. Supply curve shift to right. Australian dollars depreciates. On the other side, high inflation rate will reduce our export volume because our products are more expensive than other countries. And customers from other countries tend not to buy from Australia. Demand curve shift to left. Australian dollars depreciates. So this is the economic growth rate. As the graph shows, Australia has a steadily growing GDP rate. Higher level of economic growth will increase the demand for imports, increase the supply for Australian dollars, and shift supply curve to the right. Therefore, Australian dollars depreciates.
The public debt in United States is actually going up, and the country who have large public deficit and debt will cause less overseas investment. If a country has large debt, it's very likely to increase the inflation in order to reduce the debt. And then higher inflation rate will cause depreciation of USD. This is the action of Reserve Bank in Australia. They are actually going to remain the same interest rate and have no effect on exchange rate of AUD. The Federal Reserve Bank will very likely to increase the interest rate in order to keep inflation under the control, and the upward interest rate will cause appreciation on exchange rate of USD, because upward exchange rate is more attractive for foreign investor, and then the demand of USD will increase. Finally, the USD is going to appreciate. This is what United States Reserve Bank has announced. They are trying to recover their economy and exchange rate. In this graph, the currency of United States dollar is actually in this position. This is the original position at the end of 2017, and this is what United States has experiencing. They are experiencing the deficit and low exchange rate, and the Federal Reserve Bank is going to recover the economy and try to turn up the interest rate and the total current trend of the exchange rate is actually going up, and I predict the exchange rate will go back to the original position in recently. And actually, I predict it will keep the exchange rate of USD against AUD is going to keep going up within next 2 months, and then remain the same or decline slightly. And generally speaking, USD will depreciate against AUD will depreciate against USD, and based on Australians trade deficit in Q3, and higher inflation rate, higher growth rate for AU, and higher interest rate for US.
Okay, this is the reference, and our data is purely based on the data from reserve banks and the news. And thanks for listening. And if you have any questions, please feel free to send an email to us. Okay, thanks.